Hello, my name is Justin McKissick Larry. I am the creator of the Trade Mode algorithm, and I am the creator of this course. In this introduction video, I want to give you the basics to trading, just to prove to you that you can do it. This is for people who are beginners, or this could be for people who already know the basics. But I'm gonna remind you of the basics because it's important to know that you still have to, consider that these charts mean something. And when you go back to the basics of understanding what the chart actually is for, then you'll be able to move forward and make more money. I believe people really just forget what the chart is actually for, you know. And when you go back to the basics, I think you'll have a better understanding on why I feel like this trading strategy that I'm going to show you is the simplest way to approach the market. This strategy has been back tested by me as far as my algorithm goes about 4 to 5 years. Back testing is when you're able to look at the actual past performance of your strategy, and it's right up on the charts. But first, let's begin. So when you trade, you have to first choose your trading instrument, okay? The instrument will be right here. It's part of your market list. So there's different instruments you can choose from. Like the most popular thing right now is cryptocurrency. Some people are familiar with Forex, the FX charts right here, the pairs. You got commodities, stock indices, equities, so on and so on. Anything I choose, let's just choose the US 30, right? When I choose the US 30, all the past data of the US 30 appears on the chart, okay? If I was to choose the NAS 100, all the past data appear on the chart. So for any pair I choose, the past data of the value of the NAS 100 or for whatever you choose, the value is going to appear on the chart, okay? So there's two things on this chart. You got the past value and you got the current value. Now, in order to determine what's the past value and the current value, it's simple. You go to the candlestick all the way to the right. That candlestick represents the current price because this right here is the price currently. And it takes this price to create the candlesticks on the actual chart. Okay. So what candlesticks are is nothing more than a footprint of where price has been in the past. It's nothing but a footprint of the value of your trading instrument in the past. Okay. Also, with the candlesticks, it shows you the time, basically when it was that value. So when you look at the bottom, it shows you when it was the value, what it was. Okay. So let me grab a crosshair and show you, for example, starting here, the 29th of April 2005. This candlestick is here, all the way to here, all the way to here. So the price, you see how if you look to the right, the price value, you see over to the right, the price changed, right? And I'm just kind of gonna go back and kind of trace the candlesticks going up and down a little bit. This is basically what happened when it moves up and down on the chart. It creates a footprint in the past of what's going on. You see how the value goes up and down to the right? That's what it's doing basically. Okay, and so on and so on. Okay, so all the candlesticks to the left of the current candlestick to the right is the past. Now each one of these candlesticks has a different time frame. Okay, this is right here where the time frames can be changed. You press that button, change the time frame. Every time you change the time frame, the chart will look different, but it's still the same data. I can go to the hour. Different looking chart, same data. Now I know what you're thinking. It's obviously different looking data. But how is it the same chart? Well, it's because different time frames create different patterns. Okay. So the way candlesticks form for every time frame that you choose, price action takes that long to create that footprint. Remember, the candlestick is nothing but a footprint. So Say for instance, this day chart, it takes 1 day for this candlestick to be printed, or for this footprint to be printed on the chart. And when a new candlestick form and this one ends, this candlestick will stay the way it is, and the new one will start moving up and down. Okay. The market moves from left to right. Okay. So let me explain to you also. Now you see the price is $20,095.70. That's the value of this instrument, right? It doesn't matter what time frame you in, the value is always going to be the same because it's just based on a different time increment. So I'm in the day time frame, right? I can go to the month time frame. It's the same price because remember with the time frames, if this is the monthly time frame, each candlestick take a month to develop. If I go to the 5 minute time frame, same value, but each candlestick take 5 minutes to develop. So this is the key to making money trading. It is to determine what will the value be of whatever instrument that you choose. What would the value be? Where will it go? Will the price go up or will the price go down? Okay. And again, this is for people who are beginners, and you may already know this, but you still have to reconsider and remember what's the whole point of your chart. I believe if you go back to the basics with this type of information, it will help you choose a better way of finding the direction of the price, okay, the value of the price. So to make money, you must understand and try to determine if the price is going to go up or down, okay? Now, I have a solution for that. I use something called the moving average crossover strategy, okay? Moving averages is a technical indicator. A technical indicator is basically um it's something that follows the candlesticks, okay? It follows the candlesticks based on its parameters. A parameter is basically the speed of the moving average. So you can speed it up or you can slow it down. And when you speed it up, it shows on the chart. If you speed it down, it shows on the chart. So I'm going to put moving averages on here real quick so you can see. So you see in the past right here with the 5 minute time frame, we see a bit of a pattern, right? We obviously see the price was going up, right? The price went up, it went up. The key is to determine will the price continue to go up when the market opens, or will the price go down? So we see this, right? So this is my personal opinion, the easiest way to approach it. So I'm gonna go ahead and add my charts, my custom chart on here. Okay. So let me change it back to the 5 minute. Okay, so this is my algorithm for trading. Now we see a more visual pattern on the chart. The same candlesticks. This is the same candlesticks, y'all. The same time frame, same instrument. But now with the moving averages on here, we get some sense of direction. You know, we see a pattern based on, remember, the speed of the parameters of each moving average. Okay. So this blue moving average is the fastest moving average on this chart, and the green moving average is the slowest. Okay. So what that means is when the price goes up, the blue moving average, let me make it bigger so you can see it. When the price goes up, the blue moving average get to going up. And when the price start going down, the blue moving average get to going down. Okay. Now, that's with that particular moving average. Each moving average is at a different speed. So being that they're at different speeds, it shows differently on the chart. So with the speed of these moving averages, when this blue moving average is over this yellow moving average, the price was going up, right? But now we see some type of pattern because of the speeds are different. When this blue moving average cross under the yellow moving average and stay up under there, the price goes down. When the blue goes over the yellow moving average, the price goes up. And if we was to keep that trade open based on that pattern, you would have stayed in your trade. You would have maximized your trading based on trading like that. When it goes under down slightly, Situations like this, you don't win money, but it's still reacting to the true value of this instrument. Okay, so the moving average job is just to follow the value of the actual instrument that you trade in, just based on the speed. Okay, now with these moving averages, so these two bigger moving averages that are slower, the speed is simply slower, so it's still responding to the accuracy of the value of the instrument. It's just moving slower, but its response is showing something as well. So instead of taking all these trades up, down, buy, sells, you could also wait for this slower moving average to cross up over this other moving average, for this purple moving average to cross over the green moving average. And when it cross over and keep the spreading, the price always went up. You see what I'm saying? So in my opinion, the moving average crossover is by far the easiest approach to following the direction of the price. Because remember, candlesticks form on charts because price action is doing nothing but leaving footprints of where it's been. So moving averages follow where it's going. Okay, candlesticks footprints of where it's been. Moving averages are used to follow where it's going, and they create certain patterns on the chart. So you will learn how to follow these patterns. You see how this pattern, you see how this like purple line going up, then it get the curving and it start making like a little cuff, and then you see how this green line is going up, then it's a slight curve, or even like with the quicker moving average, you see how the blue was going down, then start going up and start like to make a curve. I teach you all that. This is the way I make money in the market every day. Also, I'm going to teach you what pairs to trade, and I'm going to teach you what session to trade. Okay. Everything you need to learn how to make money consistently trading is going to be within this course. Also, it comes with an automated trading system. So you can automate this trading strategy so you don't have to manually take every trade. It can automatically take the trade without you touching anything. And it will take the profits and it will open a new trade and it will continue to go on and so on until you stop the automated trading system. Okay. So that's what you will receive. So no longer will you have to worry about measuring based on support and resistance, where you have to do measuring, say for instance, try to figure out, okay, where's price been in the past and stuff like that, you know. No longer you have to do trend lines when you try to figure out, okay, where the trend line is going. See, when you do that type of analysis, you're taking a lot of action. You're trying to figure stuff out. You're trying to predict. You know what I mean? My approach, you're just reacting to what you see is doing. Okay? You're basically tracing the market. You're tracing. I'm going to teach you how to trace. Okay? Tracing is making me money. And a lot of the big trading legends that we know about in the past, who were the first multimillionaires in trading and the first big teachers we had in trading, they were using moving averages. And they still use moving averages. It just seems like in new times, people want to be more of a showing that how intelligent they are, showing they want to make things harder so they could come off as more intelligent, because everybody like clout. So if I could do something to make it look like it's a sophisticated analysis, even though it's hard and make money, it just felt like, oh, look at me. I'm not trying to do all that. I just want to make the money. I don't care about trying to be the most sophisticated analysis creator. You know what I mean? I just want to follow the money. And this is definitely me following the money. Go ahead and purchase now. This is Justin McKissick Larry, and this is TradeMo.co.